What's up, guys? Ramsay Rippers from Kane Capital here, back with another episode for our YouTube series, So You Want to Trade. Today, I'm going to be covering a couple of bearish charting patterns and formations that I love to see on the daily time frame, and hopefully they can help you out with your day trading. So without further ado, let's get right into it. All right, guys. So first pattern or formation, should I say, that I want to talk about today are trend lines. I'm pretty sure everyone is somewhat familiar, if not pretty familiar with this concept. Basically, they're going to help you identify trends in an overall direction with respect to price action in the market. I use these trend lines on every time frame, but I find them most effective on the larger time frame, specifically the daily, which we have pictured right here behind me, the S&P 500 ETF SPY daily time frame. You can draw these trend lines in an uptrend or in a downtrend. They really are as simple as it sounds, in the sense that a trend line in an uptrend is drawn by connecting the higher lows, and a trend line in a downtrend is drawn by connecting the lower highs. As you can see pictured right here, the lower highs are connected by drawing that trend line in this daily time frame over time. And once again, for me, the longer the trend and the longer the time frame, the more conviction and trust I have within that trend. All right, so now let's talk about a few trading rules and strategies with respect to trend lines. So in this case, if I want to go short, I would simply just wait for price action to retest my downtrend trend line and add puts with a stop on a break of that downtrend. So it offers a really high risk to reward play in the sense that I'm adding puts off of key resistance, right? A retest of that trend line, that downtrend trend line resistance, with a very high reward to the downside on a rejection, and a very low risk being a stop on a candle close over the trend line, which in most cases is just a quick and small paper cut. And I would do the exact same thing in the opposite chart. Let's say that we have an uptrend. I would just wait for price action to pull back to that trend line on the uptrend and add calls looking for a bounce. If we fail, small stop, small paper cut on a break below of that level. Now, another rule, probably the most important one. If price action starts to bounce and we come up to test that trend line and that trend line breaks, that is my indication to sell my shorts or go long. Exact same thing if we are in an uptrend. If we are in an uptrend, price action starts to pull back, we test that trend line and it breaks, that's my indication to sell my longs or to go short. As you can see in this chart right here, I have that little blue circle highlighted. We finally, after months, break that trend line to the upside. If I was short, I'd sell my shorts. And if I wasn't short, I would possibly look to go long on a break, hook, and go, but that's something we'll cover in another video. So this is trend lines, pretty simple. We're going to move on to the next topic. All right, so next charting pattern, next formation is the head and shoulders, one of my favorite bearish patterns to look for. I love finding them on the daily time frames. Also look for them on smaller time frames, but once again, the larger the time frame, the more conviction and more validity it is to me. So with respect to the head and shoulders, we're looking for three things. The first is a peak on the stock, which is classified as the head, as pictured. Then we're looking for a left and right shoulder, which are smaller peaks on both sides of the head. Usually they're relatively similar, equally as high. Sometimes one will be a little bit higher than the other. Doesn't really matter. We're just looking for a head and two shoulders, right? The head and shoulders, three peaks. And lastly, we're looking for a clear level of support where the head and shoulders sits on, which is called our neckline, as you can see below that little level drawn. What this formation is telling me is that a stock is ready for another move to the downside. Now, when the stock breaks the neckline, that is the main indication that the underlying asset is ready for its next leg, its next move to the downside. Personally, I don't like to strictly add off of a break of that neckline due to false breakouts. We tend to see those all the time. I prefer to see the neckline break, hold, and confirm, or basically give me a break, hook, and go. I'll make another video on that. A break, hook, and go before adding the short. In this case, we didn't get the break, hook, and go at all. We broke this neckline, and within like 5 or 6 trading sessions, the stock dropped 10 or 12%. Super, super violent move. And that's what these formations can and tend to give you when they play out. Go look on the daily time frame, even the hourly, the 4-hour, the 30-minute, whatever the case may be. If you spot 3 peaks, one in the middle being the highest, 2 on both sides being a little bit lower, and a clear level of support, you might have yourself a head and shoulders there. Once again, if it breaks that neckline, it's telling you, hey, this stock is ready for another move to the downside. You can possibly do a measured move target with respect to the neckline and the peak. We'll talk about that in another video. But yeah, once again, if that support level breaks, that neckline breaks, I like to wait for confirmation. You can possibly, look for a break, hook, and go, add puts on the retest, stop above that neckline, right? Another good risk to reward play, similarly to how we play those trend lines. It's basically the same thing here with the head and shoulders, although it's not a trend line. It is a level of support. Sometimes it can be, the neckline can be sloping to the upside or the downside. It doesn't really matter. But just for me, I tend to look for more confirmation rather than just rushing in. If I just play it off of a break, I'll go with lighter sizing, wider stop, just in case if that stock tends to bounce or pull back with respect to whether you're playing a head and shoulders or an inverse head and shoulders. But this is another one of these great patterns that I like to play, great bearish patterns. The main thing that I like to take away from a formation like this, the head and shoulders, is it is bearish and the stock could possibly be making another move to the downside off of a break of that neckline. All right, guys, that's going to do it for today's video. Wrapping up episode 3 of So You Want to Trade with a couple of bearish formations and patterns. If you enjoyed the video, please go ahead and leave a like, comment, and subscribe to the channel. It helps us a ton. Next week, I'm going to come to you guys with another video, very similar, but we're going to talk about the bullish patterns instead of bearish. So hope you enjoyed. Remember, like, comment, subscribe to the channel. It helps us out a ton. There is always a 7-day rolling free trial to the Kane Capital Discord where myself, along with 5 other traders, are on live voice all day, alerting trades, posting charts, TA, educational content all day, every day. So thank you guys for tuning in. Catch you next week.